Question 1. Scenario-based question. Topic: New York-specific insurance laws and regulations. Mr. Thompson is a licensed New York insurance producer who recently sold a homeowner's insurance policy to client. After finalizing the sale, he decided to offer the client refund of part of the premium as thank you gesture for purchasing the policy. Which of the following actions would be the most appropriate for Mr. Thompson to take to ensure he remains compliant with New York insurance laws? A. Offer the client gift worth less than $25 as token of appreciation. B. Refund the client 10% of their annual premium as loyalty bonus. C. Provide the client with list of other insurance products available for purchase. D. Notify the insurance company of the sale, but do not offer any additional incentives. Answer A. Explanation. Under New York insurance law, producers are prohibited from engaging in rebating, which includes offering a client a portion of the premium as an incentive to purchase insurance, Section 2324 of the New York insurance law. However, offering a small promotional gift, generally under $25, is allowed provided it does not influence the client's decision to purchase the policy. Offering refund of the premium or loyalty bonus, option B, constitutes illegal rebating. Option C is irrelevant to compliance, and option D fails to address the rebating issue. Question 2. Topic: Property insurance basics. Which of the following describes the most accurate method for determining the loss valuation of a property under an actual cash value SEV policy? A. Replacement cost plus depreciation. B. Market value minus depreciation. C. Replacement cost minus depreciation. D. Replacement cost plus inflation adjustments. Answer C. Explanation. Actual cash value SEV is defined as the replacement cost of the property at the time of loss minus depreciation. Depreciation accounts for the wear and tear or aging of the property over time. The correct method is not based on market value, option B, which may fluctuate due to factors unrelated to the insured property's condition. Option is incorrect. SEV involves subtracting depreciation, not adding it. Option D introduces inflation adjustments which are not part of SEV calculations. Relevant guideline. The principle of SEV aims to indemnify the insured by accounting for the property's condition at the time of loss, preventing overcompensation. Question 3. Topic: Life insurance basics. Which of the following policy provisions allows a life insurance policyholder to withdraw part of the policy's cash value without surrendering the policy? A. Policy loan provision. B. Non-forfeiture option. C. Withdrawal or partial surrender provision. D. Dividend option provision. Answer C. Explanation. The withdrawal or partial surrender provision allows policyholders to access part of their cash value without surrendering the entire policy. The policy loan provision, option A, allows borrowing against the cash value but does not involve withdrawing funds directly. The non-forfeiture option, option B, ensures the policyholder does not lose coverage if they stop paying premiums but does not involve cash withdrawals. Dividend option provisions, option D, relate to policyholder dividends and are not applicable to cash value withdrawals. Relevant law. Life insurance policies often include withdrawal provisions to offer liquidity, but such withdrawals may reduce the death benefit or cash value. Question 4. Topic: Casualty insurance basics. Which of the following is not a typical defense against negligence in a casualty insurance policy? A. Contributory negligence. B. Assumption of risk. C. Comparative negligence. D. Force majeure. Answer D. Explanation. The typical defenses against negligence in casualty insurance include contributory negligence, where the claimant's own negligence contributed to the injury, assumption of risk, where the claimant knowingly took on a risk, and comparative negligence, where fault is shared between the parties. Force majeure, option D, refers to unforeseeable circumstances that prevent someone from fulfilling a contract and is generally not a defense to negligence in insurance policies. Relevant guideline. Casualty insurance policies often include clauses related to negligence and liability defenses, ensuring that parties have clear expectations in case of claims. Question 5. Topic: Life insurance basics. Which of the following statements is true regarding the underwriting process for life insurance? A. Underwriting is based solely on the applicant's age and gender. B. Underwriting determines the applicant's risk class, which impacts the premium. C. Only medical exams are considered in the underwriting process. D. Applicants with criminal record are automatically rejected. Answer B. Explanation. Underwriting for life insurance considers various factors, including the applicant's medical history, lifestyle, age, and occupation. The purpose of underwriting is to assess the applicant's risk class, preferred, standard, substandard, which directly impacts the premium. Option is incorrect because underwriting involves multiple factors beyond just age and gender. Option C is also incorrect because underwriting includes more than just medical exams, such as interviews, questionnaires, and background checks. Option D is too absolute. Applicants with a criminal record may still be considered, but it could impact the risk classification. Relevant guideline. Underwriting helps determine the risk profile of the applicant and ensures that premiums accurately reflect the risk of insuring the individual. Question 6. Topic: Insurance regulation. Which of the following actions would constitute an unfair practice under New York insurance regulations? A. Providing a policyholder with a 10% premium discount for prompt payment. B. Offering a rebate of a portion of the premium to a client in exchange for their renewal. C. Disclosing all relevant exclusions in a policy to a potential insured. D. Allowing an insured to convert a term life policy into a permanent policy. Answer: B. Explanation. Under New York insurance law, rebating, offering a portion of the premium as an inducement to purchase or renew insurance is considered an unfair practice and is prohibited. Section 2324. Offering a 10% discount. Option A is generally permissible if it is clearly stated in the policy and complies with applicable law. Disclosing exclusions. Option C is necessary and is a good practice for ensuring transparency. Allowing conversion of a term policy. Option D is also permitted as long as the policy allows such a conversion. Relevant guideline. New York's insurance laws focus on maintaining fair market practices and transparency to protect consumers from unfair inducements or deceptive practices. Question 7. Topic: Health insurance basics. Which of the following is true regarding the coordination of benefits (COB) provision in health insurance? A. COB prevents an insured from receiving payment from multiple insurers for the same medical expense. B. COB ensures that the primary insurer covers the full cost of medical expenses before the secondary insurer is involved. C. COB allows an insured to collect full reimbursement from all insurers involved, regardless of the primary insurer's payment. D. COB applies only when the insured has coverage under a Medicare policy. Answer A. Explanation. The coordination of benefits (COB) provision in health insurance prevents an insured from receiving full payment from multiple insurers for the same medical expense, ensuring that the total reimbursement does not exceed the cost of the medical service. COB determines the primary insurer, which pays first, and the secondary insurer, which pays after the primary insurer. Option B is incorrect because the primary insurer does not necessarily cover the full cost, it may only cover its portion. Option C is incorrect because COB limits the total reimbursement to the actual expense incurred, preventing double recovery. Option D is incorrect because COB applies to any situation where an insured has multiple policies, not just Medicare. Relevant guideline. The COB provision is designed to streamline claims and prevent overcompensation when an individual has multiple health insurance policies. Question 8. Topic: Legal concepts and contract law. Which of the following best describes a unilateral contract in the context of insurance? A. A contract in which only one party is legally obligated to perform their duties. B. A contract where both parties must exchange promises to be legally binding. C. A contract that requires both parties to perform at the same time. D. A contract that involves a third party as the beneficiary. Answer A. Explanation. In a unilateral contract, only one party is legally obligated to perform their duties. In insurance, the insurer is typically the party obligated to pay a claim when a covered event occurs, while the insured has the option to pay premiums, but is not required to do so unless they wish to maintain the coverage. Option B describes a bilateral contract which involves mutual promises. Option C refers to a simultaneous performance contract which does not accurately describe insurance contracts. Option D refers to a third-party beneficiary contract which is different from the unilateral contract. Relevant guideline. The unilateral nature of most insurance contracts helps insurers establish their obligations and set clear terms for coverage. Question 9. Topic: Financial concepts in insurance. Which of the following is typically used by insurance companies to protect against large losses caused by catastrophic events? A. Surplus reserves. B. Reinsurance. C. Policyholder dividends. D. Premium financing. Answer. B. Explanation. Reinsurance is the practice of insurance companies purchasing insurance to cover large or catastrophic losses. This helps mitigate the risk of excessive claims and ensures the insurer's financial stability. Surplus reserves. Option A are funds set aside to cover unforeseen claims but do not specifically address catastrophic losses. Policyholder dividends. Option C, a portion of the insurer's surplus returned to policyholders, not used to protect the company from large risks. Premium financing. Option D is method for policyholders to pay for expensive insurance, not risk management tool for the insurer. Relevant guideline. Reinsurance is crucial aspect of the insurance industry's financial strategy to manage risk exposure and ensure solvency. Question 10. Topic: New York specific insurance laws and regulations. Which of the following is true about the New York State Guarantee Association? A. It ensures that insurance companies operate with minimal financial reserves. B. It protects policyholders in the event of an insurer's insolvency, but only for life insurance policies. C. It provides coverage for policyholders when an insurer becomes insolvent up to certain limits. D. It acts as a regulatory body that oversees insurance premiums. Answer: C. Explanation. The New York State Guarantee Association provides protection for policyholders in the event that their insurer becomes insolvent up to certain coverage limits. This helps to protect consumers and provide stability in the insurance market. Option A is incorrect because the association does not regulate insurer reserves directly. Option B is incorrect because the Guarantee Association covers more than just life insurance, including other lines of insurance. Option D is incorrect as the Guarantee Association does not regulate premiums. It focuses on consumer protection in cases of insolvency. Relevant guideline. The New York State Guarantee Association is vital in protecting consumers, ensuring they can access the benefits of their insurance policies even in the rare event of an insurer's bankruptcy. Question 11. Topic: Property insurance basics. Which of the following is not considered? A typical coverage under a standard homeowner's insurance policy. A. Coverage for damages caused by fire. B. Personal liability coverage. C. Coverage for flooding. D. Theft of personal property. Answer: C. Explanation. A standard homeowner's insurance policy typically covers damages caused by fire. A. Personal liability coverage. B. And theft of personal property. D. However, coverage for flooding. C. Is typically not included in a standard homeowner's policy. Flood coverage must be purchased separately, often through the National Flood Insurance Program and FIP. Relevant guideline. Homeowners insurance policies provide coverage for various risks, but flood damage is generally excluded and requires separate coverage due to its specific nature and higher risk. Question 12. Topic: Risk in insurance. Which of the following is an example of risk retention in insurance? A. Purchasing an insurance policy to transfer the financial risk of a car accident. B. Setting aside funds in a reserve account to pay for future claims. C. Avoiding a risky business investment entirely. D. Sharing the financial burden of a loss with a group of policyholders. Answer: B. Explanation. Risk retention refers to a strategy where an individual or organization decides to absorb the financial consequences of certain risks instead of transferring the entire risk to an insurer. Option B. Setting aside funds in a reserve account to cover future claims is an example of risk retention. Option A refers to risk transfer. Option C refers to risk avoidance, and option D refers to risk sharing. Relevant guideline. Risk retention is one of the methods of handling risk where the party assumes responsibility for losses instead of purchasing insurance. Question 13. Topic: Life insurance basics. Which of the following would generally be a reason for an insurance company to deny a life insurance claim? A. The beneficiary fails to notify the insurer of the death within 30 days. B. The insured misrepresented their health status on the application. C. The insured changed their beneficiary after 10 years of coverage. D. The insured dies in an accident while on vacation. Answer: B. Explanation. Insurance companies may deny a life insurance claim if the insured misrepresented their health status on the application. B. Particularly if the misrepresentation is material to the underwriting decision, while failing to notify the insurer of the death within a certain time. It could delay payment. It is not typically a grounds for outright denial. Changing the beneficiary. C. Is a standard policy provision and does not affect the validity of a claim. Death in an accident. D. Is typically covered by life insurance unless excluded for specific causes such as suicide within a certain period. A relevant guideline. Life insurance policies have strict clauses about misrepresentation or concealment in the application process. Question 14. Topic: Ethics and professional responsibility. Which of the following actions would be considered a violation of ethical practices by an insurance agent? A. Recommending a policy based on the client's needs and financial situation. B. Disclosing all relevant policy exclusions to the client. C. Failing to inform the client about potential conflict of interest. D. Offering discounted policy if the client commits to purchasing within 30 days. Answer: C. Explanation. Failing to inform the client about a potential conflict of interest. C would be a violation of ethical practices in insurance. Insurance agents must disclose any conflicts that could influence their recommendations or actions. Recommending a policy based on the client's needs. A. And disclosing policy exclusions. B. Are examples of ethical behavior. Offering a discounted policy. D. Is not inherently unethical but may be subject to state regulations and requirements regarding inducements or rebates. Relevant guideline. Ethical practices in insurance are guided by the need for transparency, honesty, and avoiding any deceptive or conflicting interests in the agent-client relationship. Question 15. Topic: Health insurance basics. Which of the following is a characteristic of a high-deductible health AHP? Low premiums and at higher deductibles. B. Coverage for only catastrophic health events. C. Requires no out-of-pocket costs for covered services. D. No coverage for prescription drugs. Answer A. Explanation. A high deductible health AHP typically features lower premiums and high deductibles. This type of plan is designed to reduce monthly premium costs in exchange for higher out-of-pocket costs when services are used. While an AHP may cover catastrophic health events, it does not exclusively cover only catastrophic events. B. Out-of-pocket costs. C. Typically require AHPs generally still provide coverage for prescription drugs. D. Though with higher cost sharing compared to traditional plans. Relevant guidelines are often paired with health savings accounts (HSAs) to help policyholders save for medical expenses while benefiting from low premiums. Question 16. Topic: Casualty insurance basics in a commercial general liability CGL policy. Which of the following would likely be excluded under the professional services exclusion? A. Business owner's slip and fall accident on the premises. B. Damage caused by product defect sold by the business. C. Injury caused by mistake made by business's accountant. D. Injury caused by vehicle accident on the business's property. Answer: C. Explanation. The professional services exclusion in a commercial general liability CGL policy generally excludes coverage for damages resulting from mistakes or negligence in the provision of professional services, such as those made by accountants, lawyers, or doctors. The other options, A, B, and D, typically would be covered under a DL policy as they involve general business activities rather than professional services. Relevant guideline. CGL policies are designed to cover general liability claims but typically exclude coverage for professional errors or omissions, which require specialized professional liability insurance. Question 17. Topic: New York specific insurance laws and regulations. Which of the following is true regarding the New York State no-fault law? A. It provides medical benefits and lost wages for an insured regardless of fault in a car accident. B. It covers property damage resulting from a car accident. C. It only applies to accidents that occur within the first 24 hours of a car accident. D. It is optional for all drivers in New York State to carry no-fault insurance. Answer A. Explanation. New York State's no-fault law provides benefits for medical expenses, lost wages, and other related expenses regardless of fault in car accident. However, it does not cover property damage. B, which is generally covered under other parts of an auto insurance policy. The law applies to any car accident, not just within 24 hours. C, and it is mandatory for all drivers to carry no-fault insurance in New York State. D, relevant guideline. The no-fault law aims to provide quick and efficient compensation for individuals involved in car accidents, reducing the need for litigation over minor claims. Question 18. Topic: Financial concepts in insurance. Which of the following is not a key benefit of reinsurance for an insurance company? A. Reduces the risk of large losses. B. Provides additional capacity for writing policies. C. Increases the insurer's surplus reserves. D. Allows the insurer to avoid regulatory oversight. Answer: D. Explanation. Reinsurance B, and C helps an insurer manage risk by reducing the financial burden of large claims, A, providing additional capacity to underwrite more policies, B, and increasing the insurer's reserves, C. However, reinsurance does not allow an insurer to avoid regulatory oversight, D. Insurers are still subject to regulation by state insurance departments regardless of their use of reinsurance. Relevant guideline: reinsurance helps stabilize the insurer's financial position and can facilitate growth by spreading risk across multiple parties. Question 19. Topic: Property insurance basics. In the event of a loss, how is the actual cash value (ACIV) typically calculated for property insurance? A. Replacement cost of the property minus depreciation. B. The original purchase price of the property. C. The cost to repair the property without factoring in depreciation. D. The estimated market value of the property. Answer and explanation. The actual cash value (SEV) is calculated by taking the replacement cost of the property and subtracting depreciation. This represents the value of the property at the time of loss, considering its age and wear and tear. The other options are incorrect. The original purchase price (B) does not account for depreciation, the cost to repair. C is not the same as SEV, and the market value (D) may not align with the insurance payout terms. Relevant guideline: SEV is commonly used to calculate insurance payouts for property losses, offering a more realistic payout than replacement cost, which would ignore depreciation. Question 20. Topic: Legal concepts and contract law. Which of the following is characteristic of an insurance contract's aleatory nature? A. The insurer's payment is guaranteed regardless of the premium paid. B. The contract involves an unequal exchange of values between the parties. C. The insured must always pay fixed premium regardless of their risk. D. The contract is voidable by the insurer if the insured fails to disclose all information. Answer: B. Explanation. An aleatory contract (B) is one where there is an unequal exchange of values. The insurer's payout is not fixed and depends on the occurrence of specified event, such as loss or accident. In insurance contracts, the insured typically pays relatively small premiums in exchange for the potential of much larger payout if covered event occurs. This characteristic distinguishes insurance contracts from typical contracts with fixed exchanges. The other options are incorrect as they describe fixed terms and C, or conditions of voidability D, which are not the primary feature of an aleatory contract. Relevant guideline: aleatory contracts in insurance highlight the contingent and unpredictable nature of the exchange between the insurer and the insured. Question 21. Topic: Property insurance basics. The homeowner has a policy with an actual cash value (CV) clause. After a fire damages their home, the insurer calculates the cost to replace the damaged portion at $50,000. The home was 15 years old and depreciation is estimated at 30%. How much will the homeowner receive from the insurer? A. $50,000. B. $35,000. C. $15,000. D. $20,000. Answer: B. Explanation. Under the actual cash value (ACV) clause, the payout equals the replacement cost minus depreciation. In this case, equals 50,000. 50,000 x 0.30 equals 50,000. 15,000 was 35,000. Therefore, the homeowner will receive $35,000 from the insurer. Replacement cost policies do not consider depreciation, but since this is an SEV policy, depreciation must be deducted. Relevant law: New York Insurance Law Section 3404 governs fire insurance policies and loss valuation methods. Question 22. Topic: Ethics and professional responsibility. Which of the following scenarios demonstrates a violation of ethical practices by an insurance producer? A producer recommends a policy that aligns with the client's financial goals and risk tolerance. B. Producer discloses the details of policy's exclusions to potential client. C. Producer knowingly sells policy to client that does not meet the client's needs. D. Producer advises client to seek additional coverage from another insurer. Answer: C. Explanation. Selling a policy that does not meet the client's needs (C) is violation of ethical practices. Producers have duty to ensure that the products they recommend are suitable for the client based on their financial situation and objectives. A relevant guideline: the New York Insurance Department's Producer Code of Conduct requires producers to act in the best interests of their clients and avoid conflicts of interest. Question 23. Scenario-based. Topic: Casualty insurance basics. David owns a small business in New York. He recently hired 3 employees and is unsure whether he needs workers' compensation insurance. He asks you for advice. Which of the following statements is correct? A. David must purchase workers' compensation insurance only if his employees request it. B. David must purchase workers' compensation insurance only if his business revenue exceeds a certain threshold. C. David is legally required to purchase workers' compensation insurance for his employees. D. Workers' compensation insurance is optional in New York for small businesses with fewer than 5 employees. Answer. C. Explanation. Under New York workers' compensation law, businesses must provide workers' compensation insurance for their employees, regardless of the size of the business. This requirement applies to most employers to ensure that employees are protected in case of work-related injuries or illnesses. Relevant guideline. New York Workers' Compensation Law Section 3 mandates that employers carry workers' compensation insurance. Question 24. Topic: Health insurance basics. Which of the following is not a benefit typically covered by Medicare Part A? A. Inpatient hospital stays. B. Skilled nursing facility care. C. Routine outpatient doctor visits. D. Hospice care. Answer. C. Explanation. Medicare Part A covers inpatient hospital stays, skilled nursing facility care, and hospice care. However, it does not cover routine outpatient doctor visits. C. These services are typically covered under Medicare Part B. Relevant law. The Medicare Act, Title SMO of the Social Security Act, outlines the different parts of Medicare and their respective coverage. Question 25. Topic: Insurance regulation. Which of the following actions would be considered rebating, a prohibited practice under New York insurance laws? A. Offering a potential client a low premium rate based on their good driving record. B. Providing a client with a free pen after they purchase a policy. C. Offering a potential client a portion of the commission as an incentive to buy a policy. D. Charging different premium rates based on the client's risk classification. Answer. C. Explanation. Rebating occurs when an insurance producer offers an incentive, such as a portion of their commission, to a client to induce them to purchase a policy. This is illegal under New York insurance law Section 2324, which prohibits rebating in most cases. Offering small promotional items, B, is typically allowed as long as their value is minimal. Question 26. Topic: Life insurance basics. Which of the following policy provisions allows a life insurance policyholder to borrow against the policy's cash value? A. Non-forfeiture provision. B. Policy loan provision. C. Accelerated benefits provision. D. Incontestability provision. Answer. B. Explanation. The policy loan provision B allows the policyholder to borrow against the cash value of a permanent life insurance policy. The loan must be repaid with interest, or it will be deducted from the death benefit. Non-forfeiture provisions A provide options if a policy lapses, while accelerated benefits C allow the insured to receive part of the death benefit early under certain conditions. Question 27. Topic: Casualty insurance basics. Which type of liability policy is specifically designed to cover professionals against claims of negligence in the performance of their services? A. Commercial general liability (CGL). B. Personal auto liability. C. Workers' compensation insurance. D. Professional liability insurance. Answer. D. Explanation. Professional liability insurance. D. Also known as errors and omissions (EO) insurance protects professionals, e.g., doctors, lawyers, accountants, from claims of negligence or inadequate performance of their services. CGL policies A provide broad business liability coverage but do not specifically address professional errors. Relevant guideline. New York insurance law Section 1113 outlines different types of liability policies. Question 20. Topic: New York specific insurance laws and regulations. Under New York law, which of the following is a required coverage for automobile insurance policies? A. Collision coverage. B. Comprehensive coverage. C. Personal injury protection (PIP). D. Rental reimbursement coverage. Answer. C. Explanation. New York is a no-fault state, which means that personal injury protection (PIP) coverage is mandatory for all auto insurance policies. PIP covers medical expenses and lost wages regardless of who is at fault in an accident. Collision and comprehensive coverage and B are optional. Relevant guideline. New York insurance law Section 5103 mandates PIP coverage for all motor vehicle policies. Question 29. Topic: General insurance. Which of the following is an example of adverse selection in insurance? A. An insurer carefully selects low-risk policyholders. B. A high-risk individual seeks insurance at the same rate as a low-risk individual. C. An insured requests a policy with additional riders. D. An insurer offers policies with varying deductible levels. Answer B. Explanation. Adverse selection occurs when individuals with higher risk are more likely to purchase insurance, potentially at the same premium rates as low-risk individuals. Insurers combat adverse selection through underwriting and risk assessment. Question 30. Topic: Health insurance basics. Which renewability clause allows the insurer to refuse to renew a health insurance policy only if certain conditions are met? A. Guaranteed renewable. B. Non-cancelable. C. Conditionally renewable. D. Optionally renewable. Answer C. Explanation. A conditionally renewable policy allows the insurer to refuse renewal only if specific conditions are met, such as the policyholder changing to a higher risk occupation. Guaranteed renewable policies must be renewed, but premiums may change.